Good evening, folks. Hope you guys are doing well. Running a couple minutes late. Had to get my OBS configured. Long story. Was on a Zoom call, private training with my private mentorship group, and knocked the water over. Just flooded $4,000 Mac and destroys it. So had to get the laptop replaced. So I had to reprogram OBS, get all that sorted out. So that's why I'm running a few minutes late. So I do appreciate you guys' patience, but we are here nonetheless. So let's go ahead and get right in. Everything should be good. Let me open up YouTube on my phone. If you guys give me a quick mic check and let me know that you guys can see the dollar, then we can move forward. Good deal. Got a full house. Caleb, buenas tardes, Gerard. ¿Cómo estamos, papa? James, hello, hello. Lee, hello. Glad to have you. Ahmed, hey Dylan, Nasdaq will not give up. What a crazy power hour on Friday. Yes, it was indeed. Yes, it was indeed. Glad to have you, Ahmed. Caleb, love this channel. Glad to have you, brother. Denisha, happy Sunday. Happy Sunday to you. Appreciate you joining us. Jair, good afternoon and evening. Glad to have you. Mr. Richards, hola. Mad Joker, good night from Spain. Yeah, speaking of that, where's everyone tuning in from here today? 73 people, got a full house. I'm sure you guys are all at interesting places. Tuning in live from Tampa, Florida. Where are you guys coming from today? Mad Joker out from Spain. Glad to have you. Matthew, Dylan, quick question. Some days I wake up naturally fearful. Do you struggle with putting on risk sometimes mentally? It's hard to always accept the risk every trade. Excellent question, Matthew. We'll go ahead and tackle that and much more when we get into the Q&A portion of the call, and I'll go ahead and address that. Excellent question, as usual. May sells. Anyone else think, or just me? Man, price has been weird all year, brother. Price has been weird all year. A lot of things going on in the world, a lot of things being thrown at these markets, and the price action has absolutely been affected as a result. So definitely. Matthew, I'll go doing what it's always been. Yeah, exactly. So even though price action may not be as clean on some weeks, or it may be difficult in certain periods of the time in the market, the algorithm is still doing the same things, right? Time and price. Olawale, happy Sunday. Glad to have you, brother. Caleb, greetings. Islam, hello, hello. Lee, in June crashes. We will see. Let's see what June brings. But again, we're going to be with you guys every step of the way and share with you guys what we're looking at going into the month of June. The Unicorn Queen, hello, Dylan. Hello, Unicorn Queen. Glad to have you. Michael, hello. Matthew Davis, thank you very much. Thank you. Ghost FX, clear. Thank you very much. Mr. Joker, thank you. All right, good. Kieran, Chris, thank you very much, sir. Jesm, hi Dylan, hello. Ghost FX, like the video? Yes, please do. Before we get into the business and I give you guys all the free sauce, I need you guys to help me out and hit that like button. Doesn't cost you anything, but again, shows the appreciation for what it is that we're doing here and helps myself and my team greatly. Thank you very much. Tuning in from Frankfurt. Awesome, Frankfurt. Shout out to Germany. Roshan, India. Awesome. Quite a few Indian folks in our community. Glad to have you, Roshan. From Cassava. Very nice. Cyclops, yo, Dylan, I trust you're doing great, brother. Love from Nigeria. Awesome, Cyclops. One of my associates is out from Nigeria, so he's tuning in from Nigeria as well. Shout out to Lagos and Nigeria. Daily Logs, hello from Nairobi, Kenya. Awesome. Guam. Haha, dai. Carla, hello, Professor. Hey, Carla, glad to have you. The Unicorn Queen, I have an average 86% win rate, but I'm using prop firms and want to know your recommendations on risk per trade and dollar amount. Profit target is 3,000. Excellent question, Unicorn Queen. I told my man Matthew, I'll circle back to your guys' questions at the end and I'll unpack all that for you going forward. So for those of you guys that are also in here, write some good questions up. Once I'm done with my analysis, I'll go ahead and get you guys squared away here going into the new week. Great questions. Hello from Ireland. Shout out to Ireland. Hello. Algeria, Namibia, Finland. Man, people from all over the place. Appreciate you guys sharing. Glad to have you guys. Ethiopia, Berlin, Delaware. Man, full house. Awesome, guys. Appreciate you joining us. Appreciate you tuning in. As usual, I know we have quite a few new people here. So what we're going to be doing today is intermarket analysis, what it is that myself, my team, what we're looking at, right? Using intermarket analysis, looking at the currency market, the debt market, which is bonds, and then going into currencies and index futures, using those other markets as insight, right? So if you want more perspective in the markets, if you want to know why the market should be doing what they're doing, if you want to know what the markets are going to do ahead of them doing it, you have to understand how to use intermarket analysis, right? And again, that's what we're sharing, making available to you guys here. How long we will be doing this on YouTube, I'm not sure. May have to move this into the private community, but as for right now, we're still going to be doing everything live on YouTube. So till then, enjoy it, and let's get right into it, guys. All right, dollar index, looking at the hourly chart. Let's go up to the monthly. All right, so as you guys know, we just closed out the month of May. Hope you guys had an excellent month of May. Great for myself. So the month of June will be greeting us tomorrow, market open on Monday. So a couple things I want to address before we get into the price action is the economic calendar. As you guys know, next week is non-farm payroll week, right? So I have a protocol that I follow on non-farm payroll week, courtesy of my man ICT, right? Who's taught us how these calendar events are going to affect the market and then how we want to trade them as a result. So my protocol, I'll go ahead and cover this for you guys. I have in the past, but like I said, I know we have quite a few new folks here. So going to go ahead and go back through my protocol. So on these weeks, Thursday, Friday tend to not really place a whole lot of emphasis on those days. I will trade Friday after the 8:30 news release, after the news drops at 8:30. It's just a normal trading day for me after that. I'm looking to get my setups Monday into Tuesday, no later than Wednesday morning session. So the 3 days I'm focused on my trading this week. If I make money Monday, I will not trade anymore this week. If I make money on Tuesday, I will not trade anymore this week. And then if it takes up to Wednesday morning session to get my setup, get the price run that I'm looking for, then I'll take that setup and be content for the week. Very limited participation on my end. Throughout my trading career, my data, the data logs, the journal entries has spoken to me over time and has told me that it's not best for me to risk my higher end risk on non-farm payroll weeks, right? So a lot of what I'm sharing with you guys is many years of refining my trading to optimize it to what you guys see me doing now, right? So that is encompassed by minimal participation with the non-farm payroll event in focus for this week in terms of economic data. So that's my protocol. So again, I will be trading Mondays. You guys know typically I'm not terribly interested in trading Mondays, but Monday of non-farm payroll week, I'm absolutely in there hunting setups, right? So now how do we go about finding these? Let's go ahead and unpack it. Dollar monthly chart. Again, the reason why I pointed out that we're also closing a month and opening a new one, because again, time is highly influential when you're looking at algorithmic price delivery, right? So we've just closed a new month here and we're about to open the new month of June. So one thing to be mindful of is that every month is going to have power of 3. What does that mean? If every candle is going to have an open, a low, a high, and a close, that's advantageous to understand and anticipate, right? So we have a new monthly candle opening. So we do want to factor in monthly power of 3 going into this new month. And let me take that off. That should not be there. So that's it for the monthly chart. We remain inside this range. So again, not terribly exciting on monthly, weekly macro analysis, right? Macro analysis has really been, I want to say missing the past, really this year, simply because we've been in a very tight range and there hasn't been a lot of range to work with, right? So it's a lot of intraday surgical strikes, equal highs, equal lows, intraday liquidity, and not overstaying your welcome. And the reason behind that is because the higher time frame just aren't moving, right? If you want to trade directional price runs, runs that are exploding in price runs, those are going to start and end with the higher time frame. So if the higher time frame isn't moving, you have to understand that the lower time frame delivery will probably be affected as a result and probably not deliver those large explosive ranges that you're looking for. So by understanding that, you're going to know how to manage your expectations. You're not going to overstay your welcome, and you're going to know how to engage with the appropriate market condition that the markets are giving you. So moving right along, weekly chart. We're inside of a dealing range from this low to this high, and we remain at equilibrium, right? So we're inside this range. To me, this is a 50-50 market condition. I want to see these equal lows here and here. I highlighted that to you guys that we were looking for these equal lows here. They kept it in the range, and again, that's because we're at equilibrium, right? So from this low to this high, that's our dealing range. That's the range that we're trading within, and we're stagnating at equilibrium, right? So when markets are consolidating at equilibrium, they become 50-50 in my opinion, because there's no one-sided directional clarity, right? It can go up or down. And you see that in the price delivery the last 2 weeks, right? It's just been staying in the range and choppy. So if you want to know when markets consolidates for your notes, at equilibrium. So another insight that I'll give you guys, when myself, my team, when we're trading non-farm payroll, we tend to not lean on weekly daily bias. And the reason being is because the employment report on non-farm payroll, the market makers, they use that sentiment on those Fridays to manipulate the sentiment in the markets for the coming month or the coming 3 months, right? Reason being is because then the next month non-farm payroll is going to be compared to the previous month's non-farm payroll. So it's a highly influential event on the markets. So because of that, I'm trying to think of how I want to word this. I don't word big runs holding till the close. I typically don't do that on these types of weeks, right? I'm looking for surgical strikes, get in, get out, get paid, get my money, and go enjoy my life. On other weeks, I will be willing to hold for one shot, one kill. I'll hold it, get in near the low of the day, and hold till the close at the high of the day. But I don't do that on these types of weeks because it's more manipulated. It's not as likely to deliver those targets because, again, the economic report is in focus on Friday. And again, how influential that is on market sentiment is really the why behind that. So surgical strikes, no real daily bias. So I'm sharing what I'm looking at from a macro perspective. But again, when I'm trading, it's intraday surgical strikes on hourly and 15-minute charts. If you train with me, you know exactly what I'm talking about. If not, when we go into the lower time frames, I'll peel the curtain back for you a little bit. So weekly chart, again, we're in this range. We're in 50%. So again, that's further confirmation as to why I'm more neutral. I suspect these equal lows are going to be in play. But again, because of the week, because of where we're at, I'm relatively neutral to bearish. As we start to get more clarity, we'll keep you guys updated and let you guys know what it is that we're looking for. Moving right along, daily chart. As you guys can see, we're in this little consolidation range here. And again, that's because we're in this parent range and we're consolidating at equilibrium, right? So it's really easy on these types of days here to change your bias up, down, up, down, up, down when it's just in a consolidation. So again, that's why I stay away from doing that. So again, right now I'm neutral. I'm looking for surgical strikes intraday with a bias that's favoring the equal lows down here, right? We have sell side here, equal lows here, and that's going to be in focus for me going into this week. So all I need is one price run in this direction, right, to get paid. That's it. I don't need the entire run from high to low. I don't need every single run. I don't need to go on Twitter, go on Telegram, see who's doing what, who's taking what trades. I don't care about any of that, right? I'm here to make money. And again, all you need is one price run in that direction. Get paid, and that's what I'm looking to do for this week. Daily fair value gap here, the one I've extended through here in purple, that's going to be an influential level throughout the entire week, just as I took your attention to last week, and you see how the market is working that key level, right? So this is going to be a key fair value gap. If you guys understand gap theory, you know how to use these inefficiencies. That'll be very helpful in terms of lending you a bias intraday when you're looking to do your trading. So right away, we see we have these equal lows here on the daily chart here and down here. So again, I suspect we're going to look to work down below those. But again, because of the nature of the week, I keep reemphasizing this because I do not want you guys to think this is like other weeks. Oh, Dylan said it's going lower, and let me go ahead and sell short right at market open. This is not the type of week to do that, right? You have to know what you're looking for. And again, it's non-farm payroll week. I may be incorrect, right? I'm not heavily leaning on a bias for this week, right? So giving you guys the caveats because I don't want you guys to get hurt on a highly manipulated week like non-farm payroll. All right, so make sure you guys are following me. Daily chart, again, this inefficiency here is going to be influential. What do I mean by that, right? Well, if you know anything about price action, these gaps are influential on order flow, right? So if we're going to be bearish, we're likely going to do what? Use this gap as resistance. What's going to tell me the market's going higher? Well, we get above it, use it as support, and rally. So you see why it's never a matter of, you know, me stressing out, oh my God, is my analysis from Sunday playing out? No, because the market's going to tell me what it's going to do. Let's say it doesn't go lower and it goes higher. Guess what? There's no losing trade there because it's not going in my anticipated direction, right? So you still have to know how to trade, right? You still have to know how to look for confirmation. You still have to know how to read the price action. Moving right along, 4-hour chart. And now here you can see the equal lows much more cleanly here. And then we have this sell side here and here. Right? So what I'm going to be watching, zooming in now. We have this sell side liquidity here. So sell side below, relatively equal lows. Want to see how the market trades down into that. We have this inefficiency here, this sell side imbalance, buy side inefficiency. So I'm going to want to see how we trade there. And if it gives a setup down into these lows, again, that's all I'm looking for, right? If it accelerates down through those lows and gets all the way down to this sell side down here, even better. I don't need all that. It's not farm payroll week. Again, I'm taking it easy. So I'll be watching this inefficiency here going forward. If we're going to be bearish, I'd want to see it sell off from here and give a setup down into the lows. So for those of you guys that are trading dollar, are trading euro, go right over to your euro charts and just do the inverse, right? Go right over to your pound charts and look at the inverse. So it's really going to be the same thing in that regard. So watching this inefficiency here going forward, I'm going to see if I get, again, a run down into those lows. And again, that's going to set the stage for what I'm looking for in foreign currency, which I'm not trading foreign currency as much right now, but I will use this as my bias for risk on, risk off for stock index futures, right? So again, you see how the ebb and flow of these markets comes together. And then hourly chart, just to refine it further. So now you can refine this 4-hour fair value gap just to the hourly here. And then again, I want to see how we trade inside this range, see if it can give us a run down into that sell side liquidity. And then if we start to accelerate down through that sell side, next target would be this low here, and then this low down here. But again, just like last week, again, it's important to have that confirmation. So what was I taking your attention to last week? So Friday. All right, so we opened last week here. And if you remember, I took your attention to this phantom trend line. Again, you guys know we don't trade gimmick retail stuff. We actually look to attack that. And you guys see how absolutely money, right? So phantom trend line, we don't look at that as actual support. We look to attack that logic. And I gave you guys that as an early draw on liquidity last week, right? But then we traded down into those lows. Yes, I told you I was looking for this low here and here. But how did we trade down through the trend line liquidity? Well, we traded down through it, and then we did what? We displaced and rejected in the opposing direction. And then we shifted market structure. Fair value gap, we traded into it, found support, rallied. There's nothing bearish about this type of price action. So again, that's why I give you multiple targets, because it's not enough to just say, okay, here's my best case target, just use that one. Don't even worry about anything else I said, right? Because it's more nuanced than that. So it did what early on in last week? It gave the run down into the trend line liquidity, the sell stops here, right? There's retail traders that are putting all their hopes, all their dreams, all their aspirations on this trend line here, only to get their ass smoked, right? Why is that? Well, because their orders are here, and smart money's going to use those orders to buy. Think like a liquidity provider. So they take it down into that trend line, and then how do we trade there? Do we continue to accelerate to the downside, indicate it's reaching lower? No, right? It shifted market structure to the upside. We also did violate 3 PD arrays on the upside, so that's another confirmation that the market's changing its direction. And then I ended up sharing this. Again, I'm trying to keep in mind what user groups are getting what. I know my private group, the Discord, you guys knew we were looking for a reversal here based off how we traded there and the institutional order flow. I'm not sure if that did make it to the Telegram. I know we ended up updating you guys, but I'm not sure if it was that soon. So I'm not trying to say I called this and this, and I really didn't, right? So, but I know I did with the private Discord, and if not, they're all here watching these videos with you guys, so they'd come out and tell me I was a liar if I wasn't. So we watched the market trade down to the sell side, and then we were watching the institutional order flow, which indicated what? It was bullish, right? Shifted market structure, fair value gap, support, down close candle, support, trading through the fair value gap into the buy side. So we had bullishness last week based off how we traded down through these lows. So I'm going to take that off here. So again, that's the importance around having several targets, and it's not always just about the best case scenario getting hit. Many times you're just going to get your first or second target hit. But again, as long as there's range, you can profit off that. So same thing going into this week, right? Because I've given you several targets, again, don't always think it's going to be the best target. You have to, again, study and know how to read price action and understand what it's telling you. Because again, just like I teach my mentorship group, the algorithm is constantly communicating to informed investors or informed traders, informed speculators. So it's important to just understand how the algorithm's communicating and learn how to read it. Because once you learn how to read it, it's always going to telegraph what it's going to do before it does it. But again, the key is you have to know how to read it, right? It's just like a language. If you pick up Mandarin for the first time, you're probably not going to have a clue, right? And that's like what many of you guys feel like the chart looks like, right? It's like Chinese. Over time of studying with professionals that know what they're talking about, that are actually able to guide you in the markets, it will be less and less foreign to you over time. But again, it takes study, just like a language, right? You don't pick up a language in the first week. It takes months and years of getting repetition to even get proficient enough to make a difference, right? And again, these markets are the same exact thing. So hourly chart, going to watch those key levels going forward on the dollar. Moving right along into Treasury bonds. And again, the Treasury, the bond market is the debt market. All currencies now are backed by debt. Most people don't actually know that. You'll be surprised to find out. Our money is not backed by anything, right? It is, it's monopoly money. It's backed by debt, right? So it's really backed by a promise. So the only thing that really gives our currency value is the value that we place on, right? So because we understand that, bonds are what? It's debt. It's a unit of debt. So if the currency is backed by debt, the bond market's going to be influential over the value of the currencies. You see how that relates? And if you just look it up on Investopedia, they may not explain it that simple and straightforward, but you will be able to get that same takeaway if you want to do your own research into that. But the debt market, again, is going to be highly influential over the currencies, because again, the currencies are a derivative of the debt market. Weekly chart, I took your attention to this inefficiency here, random turning point, right? So we were watching from this high to this low, this inefficiency here, extending that through, nailed it, and then we do it, we turn on a dime, right from the 50% level. Again, I took your attention to that level last week and the week before that, so you guys know we were looking for that turning point here. We did get a movement to the downside, but then we ended up closing not as bearish. I would have preferred to see the market stay heavy and close heavy, but it ended up retracing Thursday going into Friday, which is fine. Everything's still intact with regard to bearish order flow, which is why I took your attention to this level, right? Again, this isn't an accident. This isn't random. The algorithm is really delivering to these price levels, right? So they take it up into the inefficiency, hit consequent encroachment, and then we do it, we turn there. If you've worked with myself or studied ICT for any length of time, you know we want to see the market stay in the lower portion, right? Just like we see there. That's indicating what? It's weak. Again, the market's always telegraphing. You just have to know how to read it. Hit the midpoint, market breaks down, beautiful. If we're going to keep seeing higher dollar longer term, I would need to see bonds continue selling off. And for a draw on liquidity, if we continue to accelerate to the downside, we have this swing low here on the weekly chart, and then this weekly fair value gap here as a valid downside target. All right, so key levels I'll be watching again. We trade up into that weekly fair value gap. And as I told you guys last week, I'm going to be watching the order flow on the daily chart. What does that mean? Well, we have this fair value gap here, right? We trade up into it, use it as what? Resistance, and we sell off. If we're bearish, I'm not going to look at this as like a bullish order block, right? I'm not going to look at it as a bullish fair value gap to find support. I'm going to look for it to take true it and through it, just like we saw here. So going into this week now, zooming in. Well, actually, before I zoom in, keep in mind all these equal lows here that are relatively equal with this low here. So I suspect we do have these lows on the agenda. When we get there, we'll have to see. But for right now, just watching those key levels. Zooming in, daily chart. We displace to the downside, creating an inefficiency, which is exactly what we want to see if we're bearish. Displacement. So now we've retraced back into this range. So again, it's the first week of the month. I'm more reserved. I don't need to have a crystal clear bias this week. Again, surgical strikes, looking to get my money early in the week. All I need is one setup to do that. So I'm going to be patient this week. And what I use this week for is to gather intel, gather information, right? Because if I can use this week to see where that monthly candlestick's going to go, how easy is that going to make my one shot, one kill when I'm trading the weekly expansion? Because if you want to understand what the weekly narrative is going to be, well, then you have to understand your monthly chart. Like some people say, we don't include the monthly chart in our analysis because we don't really trade the monthly chart. In my opinion, you're losing a lot of insight. You're losing a lot of information not knowing how to read the charts correctly. The monthly chart is going to give you insight into what the weekly chart is going to do. If you understand the weekly chart, that's going to give you insight into what the daily market profile should be, right? So you see how everything just flows seamlessly in the analysis. Again, if you're doing proper top-down analysis. So it's very important to understand the monthly, the weekly, and the daily, and how they all come together. And if you want to be a really proficient intraday trader, understanding all those factors, man, will put you on a whole nother level. So daily fair value gap here. Going to be watching that going forward. How we trade here is going to be influential. We have this last up close candle here and a breaker. High, higher high, last down close. So watch the breaker and the fair value gap. I don't have the breaker labeled just to keep it clean. But this is the price range that I'm highlighting, which is just this candle's range. Let's extend that through. And then you see the high comes right in at the 50% mean threshold of that candle. Beautiful delivery. So I'm going to watch how we trade inside these key levels going forward on bonds. If we start to sell off, that's what I'm going to be looking for. And then I'll have to have that confirmed with the dollar index as well. All right, moving right along. Let's go into stock index futures. All right, start from the monthly chart again because we're opening a new month, so it's important to be mindful again of these higher time frames. All right, so we're watching this monthly fair value gap here last few weeks. I think it was actually before I went on my vacation to Panama, but nonetheless, influential level. So watching that going forward. Order flow remains bullish on the monthly chart, right? So again, the monthly chart's going to be far more important than your 1 minute, 5 minute intraday time frames, right? It's all monthly, weekly, daily. That's the hierarchy of the importance. And then your intraday is going to be influential based off those higher time frame key levels. But again, it's always top down because the hierarchy of how the algorithm refers to this information is that it prioritizes the higher time frames, which is why, again, it's top down analysis. So monthly chart, we have this inefficiency here. We traded down into it, the bodies, we're staying inside of it, which we'd want to see if we're bullish. And then we saw bullish expansion for the month of May. So what I'm going to be looking for the month of June, because everything remains bullish, again, I don't want to call a top in a bull market. So what I'm saying here is higher expansion going into the coming month. But again, keep in mind what that means, right? It does not mean we go in and start just buying the market on Monday, right? There's other things you have to understand, like power of three. All the things I'm taking your attention to, it's not because I like to hear myself talk. These are really important factors. So if we're opening a new month, we'll look at this month here. Most months are going to have a wick, right? And this one here is a special instance where it opened and the low was relatively insignificant. So there are times, it's not every time going to create a wick, but for the most part, candles are going to have a wick on the high end and then a tail on the bottom end. So because we understand that, before we open and start expanding, if it's going to be a bullish month, again, it's still the first week of the month. Again, just like I told you guys, I'm gathering information this week. If it's going to be a bullish month, though, we'll expect a wick, or excuse me, a tail to be created on that candle. So it doesn't always just mean, okay, he said we're bullish on the higher time frame. It's just time to buy the market, right? Again, there's other things you have to be able to relate and understand. Weekly chart for E-mini S&P. This should be on there. I'm not sure why. Watching this bullish breaker block in here. And there's two fair value gaps, so I'm not going to mark them. Two fair value gaps here. That's the buy side imbalance, sell side inefficiency. And then we have a buy side imbalance, sell side inefficiency right here as well. So we stab down into that. We gave you guys that as a general liquidity last week for the NAS. We shared this weekly fair value gap here was our draw. And just a beautiful delivery there on that repricing. Again, all the big price runs are occurring based off your monthly, weekly, daily charts. And then again, your intraday time frames is just simply a refinement of those higher time frames. So going back to the mini S&P, I'm watching this breaker, which is these two consecutive up close candles overlapping with the fair value gap. And I'm watching those levels going forward. If we're going to be bullish longer term on index futures, the market will find support in here and continue higher. So the market dropped down, hit the fair value gap, and then we got a nice reaction off that bullishly. So I'm going to expect continuation, expect bullishness, again, as long as we remain above this bullish breaker here. So again, this range is what I'm highlighting, which is these two up close candles. Extend that through. That's going to be influential on price action. So again, if we get down through it, then that would invalidate my bullish bias, right? Then I would just get in line with what the market's showing me. But as long as we remain supported here, I will be looking for higher prices on monthly, weekly, and daily charts. Moving right along. Daily chart, so you can see that big gray rectangle here. That's that weekly fair value gap. I'm going to go ahead and take that off to clean it up. But again, that's a range. That's a level you want to be mindful of going into this week. Daily chart. We saw rotation lower last week, and that was because, if you'll recall, I took your attention to the S&P. Let me get that template loaded up. Session chart. All right, there we go. So if you guys recall last week, I took your attention to the SMT here between the Dow. I said that's something that would be important to monitor. And what I'm referring to is this divergence here. Right here, you'll see Dow failed to make a higher high, while Nasdaq and S&P did. And then when that SMT held and we started seeing weakness come into index futures, that's what told us to take our attention to lower prices. So that's how we were able to adjust last week, let our community know where the market was going before it did so, and let you guys know even on Twitter and Telegram where we thought it was going as a result of these factors, right? So again, it's always important to be fluid. At the beginning of the week, we were bullish because, again, we're at all-time highs and we don't want to try to call a top every single week. However, it doesn't always mean the market's going straight up, right? So you have to know how to adjust. You have to know how to be able to be fluid with the information, again, that the market's giving you. And when it gives you new information, it's not, what we do is not stay stubborn and say, okay, well, we called it higher, so it has to go higher. You have to, again, get in line with what the market's communicating to you. And last week, that was lower prices, and that gave a nice setup for a retracement down into a short-term discount. But again, it was the SMT at the highs, and look at the acceleration on the downside with Dow. And then that's what pulled the other index futures down with them as well. So that's what I was referring to there. So looking at the S&P daily chart, the market traded down. We took out this short-term low, which would have short-term sell-side liquidity. So the sell stops that would be below here, right? Why would there be sell stops there? Well, because we have been bullish. So anyone that has a long position, they're going to protect that buy with a sell stop, right? Where would that sell stop go? Where do the books tell them to put their sell stops? Below the short-term lows. Here, here. So the market digs down into that to attack those orders. So what I was interested to see on Friday was how we traded down into these discount levels, right? Because again, keep in mind, that's a weekly bullish breaker and a weekly inefficiency that we traded into here. We hit those levels, we took out the sell side, and then we diverged with the Nasdaq. That's why we saw that reversal last week. So if you go to Nasdaq failed to take out that low. So that SMT here at the lows, that divergence between the Nasdaq and the S&P, I'm going to watch that going forward. If it holds and Nasdaq fails to make a lower low, let me just put it up here comparatively. You can see that divergence between the two averages. If this divergence holds, that's going to be further confirmation, because think about what's happened. Weekly chart, we've traded down into the bullish breaker. We've traded down into a key weekly fair value gap on Nasdaq and S&P. So we're at a critical level. How would the algorithm indicate to informed investors, people that look at the market like you and I do, how would the market communicate that? Well, it's going to show a cracking correlation, because there's people that, again, are informed in these markets, and they do know to look for these specific signatures, again, that the algorithm's communicating to them, right? And again, that's what I'm making available to you guys here. So I'm watching that divergence. And again, with SMT, I think it's one of the most misunderstood concepts that ICT's made, to be truthful with you guys, because a lot of people, I think, misuse it. They just look for divergences all the time. The divergence, because there's a divergence at the highs as well, right? There's SMT at the highs and at the lows. So it's a matter of knowing what you're looking for and then using SMT to already confirm what you're looking for, right? It's a confirmation tool. So with that in mind, I'm going to watch that divergence at the lows. Let me go ahead and take that off. And if it holds, that's going to be extremely bullish going forward, right? Because Nasdaq was unable to take out that lower low at a critical level, right? Which is those weekly key levels that we're trading in. So then when we see that divergence at those key levels, again, that's indicating to those informed speculators that we're likely going to see a market reversal. So for timing market reversals, it's good to use intermarket analysis to confirm that. So daily chart, we dropped down below the short-term lows, so sell stops were taken, right? Anyone that's long, they're stopped out. right? And again, that can be understood as simply as external range liquidity here, which means we take out liquidity outside of the range, and the market's going to seek some measure of internal range liquidity inside the range we just created. And that's a cycle that constantly continues and is at play in the markets. So from the external, we retrace back down to the internal range liquidity, and now we're continuing back up to the upside. So let's go ahead and zoom in here. Man, beautiful ranges last week. And what do I mean by ranges? For many of you guys that have been trading index futures for any amount of time, you'll notice that every day isn't made the same, right? When the ranges are just 100, 150 points on Nasdaq, that's a lot different than these days that are 427 points a range, right? So as a futures trader, you have to be mindful of the size of the range that you're trading in, because that's going to influence your risk. So it's great for me, my team. We love to see volatility. We like to see open ranges because there's just a lot more opportunity, right? Like if you look at ES and you look at the size of the range from high to low on the day, that's a 100 handle day on S&P. I love that. Why? Because if it's moving 100 points, how easy is it going to be for me to get 5, 10, 15, 20, 30 points? Not that hard. So it just makes trading a lot easier if you know what you're doing. If not, the volatility will absolutely just smoke your ass, but you have to know how to trade it, right? So we love volatility. We welcome it. We want to see open ranges because it just creates more opportunity, right? We like to see markets that are moving. As traders, we just need movement. So these open ranges, I'm hoping they're going to be sustained going forward. And because we had a relatively lackluster spring months, I'm going to be expecting more animation, more volatility going into the summer months. So as I was telling my private group this past week, I think we're going to have a roller coaster ride of a summer with regard to price action. And especially with, again, everything going on in the world, that will absolutely influence the market as well. So daily chart, zoom into this here. So again, divergence at the lows. I'm watching this inefficiency here. If we're going to be bullish, I want to see us use this as an inversion fair value gap. Right? So I'm not going to expect it to hit this and sell off. If it's going to be bullish, the market will use it as support and then use it as a launch pad to go higher. If we're going to be bullish, right? So again, that's why it's important to have confirmation, because what happens if we just open and we just sell right through this going in the next week? Well, then there's no long trade, right? But if it starts to show these signatures that I'm looking for, it's a lot of if then, right? If the market does this, then I'll do this. If it does this, then I do nothing. And again, the reason it's binary is because the algorithms are binary in how they're coded. So if you understand that, that's why my dialogue around the markets, my team's dialogue around the markets is centered around if then. If it does this, then it's more likely to do this. Because again, that's more of a fundamental understanding of algorithmic price theory. So would want to see the market find support here inside this inversion fair value gap if we're going to be bullish and start working towards the highs here. Four-hour chart. So we trade down, sweep the sell side here. We create a divergence with Nasdaq, and then we displace to the upside. So we shift market structure. We overrun several key premium arrays. So that's indicating to me the market's bullish and it's going to want to reach higher. So for targets on the upside, we have the buy side here, and then we have a new all-time high inside. And then if you want targets on the upside, you can measure the last retracement leg, or the last retracement. Measure the leg that starts the price run, and then you can use that for upside targets on the upside if we get to and through these levels, right? So there's a lot of if then, but I know if we are here this week, you're going to say, oh, well, what targets do you have, Dylan? This is exactly what I'm going to be doing right here. And then I'll use it on other price legs intraday for even further confirmation of these standard deviation targets. But those are going to be my targets on the upside if the S&P holds and order flow remains bullish, right? So again, there's other things we have to understand. All right, hourly chart, zooming into the business here. Nice reversal, as Ahmed was pointing out at the beginning of the stream. Nice reversal on the indices in the last hour. Again, overrunning several key levels. So it'd be nice to see the market retrace. Will we come all the way down into a short-term discount? I don't know. At a minimum, though, I do want to see the market retrace back down into this breaker here. So this up close here, be interesting to see if we can get an early sell-off next week into the breaker, fair value gap, and then see if we can get lift from there. So that's what I'm going to be watching going into the new week. It may not even want to come all the way down into a deep discount though. So again, it's just about studying the price action at the right times of day, and it's going to tell you everything you need to look for, right? So when you're going into the New York open kill zone or London open kill zone, it's about studying the price action at that time. So again, I can only give you guys so much because the open on Sunday could just completely, erase all this, right? We could gap open several points or gap down several points as well and just change the analysis, right? So again, it's just a matter of knowing what you're looking for at the right times of day. So that's what I'm watching on ES. All right, moving right along into the Nasdaq. So we see Nasdaq traded down. Week monthly fair value gap. Let me go label that. We see the bodies respecting it, and then we see a bullish month for the month of May. Expecting the same to continue going into the month of June. Again, I'm not interested in calling a top on this market. When the top's in, it's going to be in, and then from there, we'll just take it day by day when we get there. But for right now, I'm just trading the underlying order flow, which is indicating higher prices. Weekly chart. All right, same thing as on the E-mini S&P. Going to go through this one a bit quicker since it's really going to be the same thing. Weekly bullish breaker, which is the highest up close, which I believe is this one. Let me see. I'm looking at the close up here. 57 or 571 and a quarter, and then the close here is 63. Okay, so it would be this one here. So this up close candle is the one that I'm referring to inside this range because it has the highest close. So extending that through, that's going to be the bullish breaker on the Nasdaq. Again, S&P and Nasdaq are going to have similar market structure. And then we have this bullish breaker overlapping with the fair value gap, right? This was the draw on liquidity that we gave you guys last week that we were using in our trading. And we were selling and we were taking shorts on index futures. I was live with my private community. We were riding shorts, not riding shorts like I'm putting them into trades because again, I'm teaching them how to find these setups. I'm not spoon feeding them. They learn how to trade. They're not getting spoon-fed setups. But I do take them into the market and show them when the setup's going to form, how it's going to form, several entry techniques on multiple time frames. Again, because just because I trade on a 1-minute chart, the people that I'm working with may have to trade a 15-minute chart. They may have to trade an hourly or a daily chart because their schedule or their personal life doesn't permit them to intraday trade. So someone that knows how to teach this effectively will give the student several ways to engage with the market because it's not just limited to one trick pony. There's a lot of ways to make money on this. So whenever I'm teaching, again, it's all over live price action, showing how these markets are booking and why. Because again, that's the only way this can be learned. It was actually interesting. I get a lot of questions about mentorship, and a lot of the people were actually pleasantly surprised in the group with regard to what we did, the level of mentorship that we're delivering. And then, I was kind of caught off guard by it because I was like, there's a lot of mentorships, a lot of people, training other people how to do this. But then I come to find out, a lot of those guys are just, giving hindsight videos, nothing over live price action. And man, it's a wonder why, you just wonder why this industry is a bloodbath, man, because it's just a lot of the blind leading the blind. And it's no wonder why the industry is a bloodbath. But I digress. Enough of that. Weekly chart. Fair value gap, we were looking for lower prices based off that, and again, was doing it live. So again, it's no hindsight. We were walking these targets live with our community. Down into the weekly fair value gap and bullish breaker, we called nothing lower than this because again, there's a bullish breaker here. So I want to see how we trade here. Do we find support and indicate we're going higher, or do we just melt down through it and indicate we're actually going lower? Right? That's what I was waiting to see. Strong close on Friday, indicating bullishness. This weekly fair value gap here, highlighted by the two black lines. Those are going to be influential going forward. As long as we remain above that, I'm looking for higher prices and I'm bullish on Nasdaq. If we get down below this fair value gap here, then I'm no longer bullish and I'm neutral. And then I'll update you guys if and when we get to that point. Zooming in daily chart. Again, here you can see that weekly fair value gap. I'll show you again on the weekly chart. That's the efficiency. And now we're looking at those same levels just on the daily chart. Right, so you guys can see equal lows here and here. So that was one reason why we called that as a draw on liquidity. But below the lows, the algorithm reprices the two things, right? Sell stops, which we can see sell side here, but there's also what? An efficiency here. So it's going to reprice to the liquidity and the inefficiency. And then we see that trade down into here. We also hit the bullish order block. Extend that through and then make that. So down close candle before the displacement to the upside. We traded down, hit that level, and then we saw a nice reaction off that level on Friday. So that's what rounded out our low. I wanted to see how we traded inside this key level, and then we showed a nice displacement to the upside. So again, this weekly inefficiency here, again, as long as we find support inside this key level, I'll be looking for higher prices. However, if we trade down below it and we start to see weakness, then that would invalidate this as a bullish key level. And then again, I'll just get in line with what the market's showing me. But as of right now, looking for higher prices based off these signatures. But again, this week, I'm also not leaning heavily on daily buys as well. So I'm going to let this week paint the narrative going into next week. And the next week, I'll be a lot more firm in my analysis and what I'm looking at going several weeks ahead. So that's the business hourly chart. Nice delivery last week. Tuesday high of the week priced in. Market breaking down. Hourly fair value gap, trades up into it, sells off, leaves equal lows here and here. Market retraces, attacks the lows. Market retraces back up into the inefficiency, bodies respect it, and we get a nice sell-off on Friday for a intraday reversal happening at the lunch hour. So lunch hour reversal, back up into the range. S&P was a lot stronger, taking out its buy side. So that's something to monitor as well. Maybe S&P will be better for longs going in the next week, and Nasdaq better for shorts. But again, it depends on several factors and how we're trading with respect to each session. So Nasdaq hourly chart, we have a balanced price range here. So that's going to be influential on the hourly chart, and then give you guys the levels I'm looking at intraday. So balanced price range is where these inefficiencies here overlap. So you'll want to watch that going into this week. If we're going to be bullish, I want to see us find support in here, trade higher. If it's going to be bearish, we're going to get down through that and not use it as support. And then that'll indicate something in and of itself, right? So again, shared what I'm looking for, but it's a matter of waiting for confirmation, but also understanding the context of the economic calendar, right? Which I hopefully emphasized enough in this session. So with that, guys, that's the business. That's what I'm looking for. That's what my team's looking for this week. We will give you guys updates if and when they're necessary. But I'll go ahead and get into your guys' questions now and look to get going. I still got a team meeting to take care of here for the week starts. So I'll take your guys' questions and then we'll look to get going. Matthew, I know you had a question way up there. Let me go ahead and check that out. Matthew Davis Dillon, quick question. Some days I wake up naturally fearful. Do you struggle with putting on risk sometimes mentally? It's always hard to accept the risk every trade. Yeah, that is an excellent question, right? Because again, that's the nature of what we're doing, right? Accepting risk. And if we're not comfortable in that risk, we're always going to fumble the bag, right? What do I mean by that? Well, if you get into a trade and then you're uncertain, a natural retracement will scare you out, and then you'll just get out of the trade, then it'll explode into your direction, right? We've all been there. I'm sure you guys have as well if you've been trading for any length of time. And that's all what? Because of fear-based thinking, right? Or you get into a trade and it moves in your favor and you just want to close it out, right? Because there's no confidence. You're fearful. Man, I may never get a winning trade again. All those thoughts are rooted in fear. The way you overcome that is you have to start slow. You have to start small. Because if the outcome of one single trade is influential over you, whether or not you're eating, whether or not your rent's getting paid, if that is going to be determined off one single trade, man, you're taking something that's hard and you're making it fucking impossible. Literally. You have to be good outside of trading to be able to do well in trading. And I'm not saying this applies to you directly, Matthew, but I've worked with a lot of different people. And, there's a lot of unique situations out there, right? So the big thing is in trading is you have to get to a point, and this is something different for everybody, right? Someone from Africa money means a lot different proportionally to them than someone in the US or someone in Europe, right? So it's all unique to us, right? Because for me, risking $100 may not be a lot, but someone in another country risking $100, man, that may be just off the charts. So it's important to understand whatever that sweet spot is for you. But the sweet spot is getting to a point to where each trade doesn't matter. And not saying it doesn't matter because obviously money's important, but not in the sense that it's an Olympic feat or it's a big deal or, oh my God, this has to be the trade. You know, if you're still having thoughts like that, we need to completely eliminate that from the thinking, right? Because one trade in a professional trader's career is nothing. But if it is a big deal, it's because either we're way oversized or we're trading before we're ready to do so. So my recommendation is if there's a lot of fear that's filling up the mind, replace it with confidence. How do you replace it with confidence? Put in the work. Get in there, live tape read, focus on people that know what they're talking about, not all these jokers out here that are real flashy with the marketing. I'll give them that, man. They're real flashy with the marketing, but they don't know shit about the markets. So first of all, listen to someone who knows what they're talking about because they're going to give you confidence. Number two, make sure you're comfortable with the risk. And again, that's different, right? Someone in USA is going to be totally different than someone in, you know, Africa or Asia, right? So it's all just depends on where you're at. But again, the key is to make sure you're comfortable with the risk. You can sleep taking every trade, or you can sleep at night taking the trades that you're taking. So that may mean doing the math, right? Okay, what happens if I take a 3-trade losing streak, which is possible? Man, if that's breaking the bank for you, then you're doing it all wrong. So you have to get to a point to where the outcome is irrelevant because you're not swayed emotionally by it, right? So professional traders that are taking down millions of dollars every year, or, you know, 6-figure salaries in a month, when they're putting on those trades, you know, it's not any more exciting than when they first started trading just 1 or 2 contracts. But now they're doing 20, 30, hundreds of contracts because they've been able to grow over time and they have confidence. So over time, as you grow incrementally, you grow in a sustainable pace, which means not going from, okay, I'm profitable 1 week, let me trade 5 minis now because, you know, I got it all together, right? Just growing incrementally is going to be extremely helpful in that, because most do it all wrong by finding some consistency and then trying to do way too much too quick. And then they add stress, they add unnecessary pressure on their trading when you just started to find consistency. So my recommendation would be start slow, risk what you can sleep at night risking. And if that means sizing way down just to build your confidence up, then do that. Because if we're fearful, man, we're just naturally going to manifest or create instances that are going to align with that fear, right? So, you know, a perfect example, right? If you're fearful, this happened to me a lot early on. So I'm drawing from experience here with you guys, keeping it real with you guys. When I would get into the market before I really knew what I was doing, I'd buy I'd see it drop into the fair value gap, but I'd be fearful. Man, what if it stops me out? And hit the fair value gap, that should be my entry. And then it runs away. And then I'm like, okay, well, there's the confirmation, right? So then I'd get in after the market's already ran 10 points on the S&P or 30, 40 points on the Nasdaq. Man, I should already be taking profits here, not getting in. So then I would get into the move. A natural retracement stops me out because I chased price. But where did all that originate from? Being fearful in the markets. So trading fearfully, man, will just create so many unnecessary problems in your trading. And again, the way you eliminate that is you just size down. You have to size down to what is comfortable for each individual. So I get that question a lot. So I'm actually glad you brought that up, Matthew, so I could address that here for everybody. Great question. And then I think there was one more. Yes, the Unicorn Queen. I have an average 86% win rate, but I'm using prop firms, and I want to know your recommendation on risk per trade in dollar amount. Profit target is 3,000. So I'm gonna start by answering with, I never give anyone direct financial advice. I never say risk this much or risk this much, but what I will do is help you come to the conclusion of what you should risk based off where you're at. Unicorn Queen, if you're funded, so there's a caveat to that as well. It depends on if you're in the evaluation stage or if you're in the funded stage. I would recommend taking them both serious and doing them both the right way. But if you're funded, well, actually, let me Unicorn Queen, are you talking about an evaluation or you have a funded account and now you're looking? Oh, wait, no, profit target is 3,000. Okay, so yeah, you're talking about the evaluation. Okay, great. So 86% win rate, you need a $3,000 profit target. So what I would recommend is find out what risk you're comfortable with, right? So what would that look like? So the degree of leverage you use in futures is obviously based off the amount of contracts you're doing, right? 1 contract, 2, 3, 4, 5, 6, and that's all going to depend on the risk you're taking on and where you're comfortable. what I do, what my team does is we factor out the math, right? That what makes sense to risk here. So I think if it's the $3,000 profit target, that's probably the $50,000 account, which is $2,000 of drawdown. So you have $2,000 of drawdown to work with. So don't look at it like a $50,000 account. Look at it like a $2,000 account. And then from there, you want to factor in, okay, if I have to make this much, I have this much to lose. Let me do something that makes sense with this. So that may be just risking $200. Why would you risk $200? Well, if you take 10 losing trades, that would be what would eliminate the account, assuming you kept the risk constant. And if you're reducing it by half, which I would recommend, reducing risk by half on each loss just to prevent a spiraling of the drawdown, the recommendation would be find where you're comfortable and do the math. Because if you understand the math behind what you're doing, you're going to have the confidence. Because if you can say, wow, this system will let me take 15 losing trades and I'm still going to have my account, that's going to give you confidence. But me knowing it doesn't do anything. It's you that has to deeply understand it and understand how you're going to go forward. So what I would recommend is put risk on the table that you're comfortable taking. Do the math, see how many losing trades can you take with this risk protocol, how much losing trades can you take with this protocol. And most importantly, make sure that it's something you're comfortable taking so that whenever you put the trade on, there's no second thoughts. You're like a stone cold assassin. You see the model, you take it down, and you keep moving forward, whatever the outcome is. And again, that's exactly how people that are doing this consistently are looking at the markets. So hopefully that helps you out there, Unicorn Queen. Great question. May sells, I trade silver bullet on Nasdaq. In my back testing, I recently studied the silver bullet on ES2 and find how much cleaner price reacts to fair value gaps on ES compared to the volatility in NQ. 5 handles is all I need. Awesome. A lot of people prefer the volatility in Nasdaq, but S&P is enough for a lifetime. It's enough for a lifetime. So if you like S&P, man, 5 handles is absolutely all you need. And that's a lot of what I've been peddling to my private group as well, is that you don't need a lot to make a lot, you know, and they're starting to really see with their own eyes, with their own work, wow, what's possible with just a very simple approach that gives you consistent points every week. And seems like you're on track there. And really, it's a personality preference. Some people may not like the Nasdaq because it's a bit faster. S&P is a bit slower in its delivery. The Nasdaq moves a lot quicker because it's more thinly traded, so it's going to reach for the orders a lot faster than that S&P will. But S&P is a great asset. Again, the big thing is just finding where you're comfortable and what makes the most sense for you. So appreciate you sharing. Yeah, ES is smooth, but do like the Nasdaq volatility when I'm on side. Yeah. Leo, first time we don't agree on dollar bias. Let's see. Absolutely. Let's see. Will be interesting to see this week. And again, it doesn't always need to be an agreement, right? We're all independent analysts looking at things independently. So I'm sharing what I'm looking at, but I know how to adapt as well. So if I'm wrong, then I'm wrong as well. So we'll have to see how that plays out. But here's the good thing. Right or wrong doesn't make any more or less money, right? It's all about how you manage your trades and how you employ your models. It doesn't really matter whether you're right or wrong. And the only reason I say that is because I've been wrong many times, but I'm still fucking banking, right? So it's just all about knowing what your model is, what you're doing, and man, right or wrong, for the birds. It's for the birds. Anita, hit that like button, everyone. Yes, please do. Thank you, Anita. Hope you're doing well. Wow, seasonal shift might be in play. Didn't even see the SMT with Dow. Yeah, something to monitor. May. I'll be watching that going into this week and then going into next week. But like I said, after this week, non-farm payroll week, I'll have much more clarity going into the month of June. SMC trader, same thinking about DXY and DS. Awesome. Cyclops, give the stream a like, guys. Thank you very much. Please do. Jesem, when you say you have to know how to trade, could you be more specific? Yeah. So when I say you have to know how to trade, right, I'm saying it from the standpoint of, man, you have no idea the types of DMs I get. It's not just like, for example, if I say I'm bullish dollar, right? Someone that doesn't know, how to trade, they may think, oh, well, we opened on Sunday. He said we're bullish, so let me just buy the market. So when I say you have to know how to trade, you still have to know how to get an entry. You still have to know how to have confirmation. You still have to know what you're looking for with your respective model, right? So when I say that, it's more so the caveat for those that can't take accountability and like to blame me for their trades or their losing, when in reality it's a individual sport. So when I say that, it's just my caveat to those that like to blame me for their decisions. So it's just about knowing what you're looking for in your confirmation and in your own trading is what I'm referring to. Med, blind leading the blind. I tried to trade live with my friend and call price real time. There you go, brother. Not many doing that, Ahmed. Not many doing that. Glad to see it. Ali, we really did miss your trade review, trades videos, the good old days. Think about them. Yes, all the videos on the YouTube. Yeah. Now all my effort is going into my private community. So it's just about working with those guys and gals and getting them up to speed. So all the energy that I was putting on YouTube, man, is tenfold now in my private community, getting those guys and gals uh, up to their goals and up to speed. So all my hands are full. All my energy is again directed on getting my private clients to the finish line, getting them where they need to get to. Cobra looks like a market maker buying model. Yes, indeed, indeed. That's what I'm looking for on index futures. Absolutely. Cedric, who's the stronger between Nasdaq and ES? Not the same based on S&P at the bottom or the 1 hour reversal. Right now, S&P is much stronger, and you can tell that by the market structure. ES has already taken out its high, and look at how it traded above that high. Nasdaq hasn't even been able to get above it. And if you also see, Nasdaq was a lot more animated on the downside, so Nasdaq had a lot more room to cover to the upside. Whereas ES, it still dropped, don't get me wrong, but it was a lot more reluctant to drop than the Nasdaq. So they had a lot less ground to cover to get to these buy stops. So I would say, based off what I'm seeing right now in the present structure, S&P is stronger. But again, when I get to the charts in the New York session, it may indicate that Nasdaq stronger, S&P stronger, and then I'll have to get in line with what I'm looking for then. As of right now, though, gun to my head type situation, I would say S&P stronger based off the current market structure. Jair, trade Top Step to avoid big personal risk and get rid of fear of trading. Yeah, absolutely, absolutely. The prop firms are a great resource. I always recommend to build towards your own personal capital, but leveraging the opportunity of prop firms and what they're making available right now, man, in my opinion, is a once in a lifetime opportunity. So definitely take advantage of it. But I would always recommend to look to get to a point of being able to finance your own trading. Matthew, I asked my prior question because I was killing my combine, but because I'm right next to the profit target, I'm scared to go back down. Okay, gotcha. So what I would do in that instance, Matthew, I've worked with clients in the past as well that have been right there where you're at. They're just about to pass their account. They're just about to get their payout. And now, man, the outcome really matters because that's the difference between you being a funded trader or staying a demo trader, right? So, it means something. So what I would recommend to do in that instance, if you ever feel the emotions heighten, just size down, right? Let's say instead of using your normal risk and just passing it in one trade, let's say you size down by half or a quarter, and then it just takes you 2 or 3 trades to get to where you want to. At least you'll get there with lower risk, less anxiety, and you'll get there probably quicker than if you kept your risk high and trading with a lot of stress. So what I would recommend and this is the easy solution, right? If you ever have stress in your trading, just size down. That's always the right answer. Just size down. There's more setups, there's more trades to make money on. But the issue is a lot of people can tend to view the markets and think there's never going to be another trade. So man, I better size up, balls to the wall, go all in because I'm never going to see another trade setup, right? But again, Matthew, we've been working long enough. You know what you're doing. So what I would recommend with regard to getting to a critical stage in your trading, because you're always going to be at a critical stage, right? You may, right now, it may be passing the combine, but pretty soon it's going to be getting a payout. And then pretty soon it's going to be getting to 10,000, to 5 figures. Then it's going to be getting to 6 figures. So before you get to those big mile markers, I would always recommend size down. Because again, I've worked with many people in the past and even myself through personal experience. I've been at the finish line a lot and with challenges. And even before, when I was trading before all this was even really popular and it was just trading live funds, I wish I would have had the advice that I just gave you with regard to sizing down because it would have saved me a lot of heartache, a lot of accounts, and a lot of stress. So that'd be my recommendation for you, Matthew. Jared, trade micros then? Yep, absolutely. Great question. Unicorn Queen, I have both funded and eval. I'm trading micros so I can scale in and out easily. Well done. Yeah, I would definitely recommend that would be the best way to go forward. Thanks, Dylan. Mapped out, risking $250 max per trade. Gives me 10 losing trades in a row, which should never happen. If you truly know how to trade and have a good strategy. Appreciate your response. Awesome. Glad that was helpful. Good luck and keep killing it, Unicorn Queen. Lael, same. Good deal. Good deal. Daniel, how do you use weekly profile and how do you use it this week? Great question, Daniel. So typically, every week I'm looking to map out the weekly profile, right? Like Tuesday, high a week, like we saw last week, which is typically met with like a Friday, Thursday, low a week. So typically, I am always trying to map out the weekly range, right? Because if you know the weekly range, right? Like, okay, Monday consolidation, what we expect, right? It's all time and price based. Just like I teach, price isn't going to do anything that it's not time for it to do, right? So Monday, what's the expectation? Consolidate. Tuesday, we expect accumulation, manipulation, distribution. So if that's going to be the weekly profile, then that makes it really easy for me to go to my daily chart and trust, okay, expansion Wednesday, expansion Thursday, expansion Friday into a reversal. So by understanding the weekly, it gives me insight into the daily. So it's extremely helpful. So I absolutely use it. However, for the second part of your question, how do I use it on this week? That's the caveat. These weeks, I don't tend to demand that level of precision, and I don't try to have that level of precision. Again, I'm looking for surgical strikes in and out. So I'm not as much mapping out these weeks because in my past, these weeks are a lot more manipulated. It's a lot more difficult to do that. And I actually spent a lot of time in frustration trying to map out the weekly profile, map out the daily profile in a week where it's just not as likely to give that same level of precision. So what I do, the way I sleep at night, the way I keep peace in my heart and mind, is I just don't worry about it on these types of weeks. I'll still look at it, like, it's still in the back of my mind, but it's not something that I'm trying to force. And not that I ever force it on other weeks, but it's something that I'm just not using as much. So that's how I use it. That's why I'm not using it as much this week. And then again, the way I'm trading on these types of weeks is hourly chart, 15-minute chart, surgical strikes in and out, and then looking to get paid early in the week and just be content with enough. That's what works for me on on-farm payroll. And that, yeah, that's what works for me. It's a good question, Daniel. Jay, how many followers do you need to do a live chat on YouTube? Sorry, live stream. I don't think you need any. I think you could do a live stream with 0 people. I think. I don't know. I'm not a technical guy. I'm not gonna talk about something I don't know. But I think an internet search should clear that up for you, Jay. My associate Abraham, he takes care of all the technical things, so those questions are above my pay grade. So I don't know too much about that. So I don't want to give you the wrong information. Jir, I've played chess in 60 years, so I learned to live with losses, and now in trading is not an issue. There you go, Jir. Good deal. Matthew, I'm bullish dollar because of bonds. Yeah, bonds are confirming strength in dollar, so we'll just have to see how it plays out. Jir, I'm bullish on crude oil due to OPEC keeping cuts. Yeah, actually, let's take a look at crude oil. I'm sure there's quite a few people. I'm surprised I haven't got the question for crude oil yet. Usually, you guys have me look at that market before we get going. But I remember it's going to take a look at it. Man, grain market's given some good action. If you look at corn, man, or not corn, excuse me, wheat, man, wheat has been delivering, and I've been calling targets, sharing what I'm looking for, and I've been trading this market. Just really, really nice delivery on the wheat markets. And as I indicated to you guys at the beginning of the year, there's a lot of opportunity in the commodity markets this year and going forward, in my opinion, just because everything that, again, is going on in the world. Don't want to get into all that. YouTube would probably put me in timeout if I express my thoughts. So not going to share much there, but key takeaway for you guys as traders is that there's going to be a lot of opportunity in the grain and commodity markets, in my opinion. And I'm absolutely all over it, like white on rice as well. So something to keep in mind. All right, back to crude oil. Weekly chart. Crude oil's in a nasty range as well. If you go up to the monthly chart, not a whole lot going on there. So same thing with crude, surgical strikes. All right, zooming into the weekly. We're opening a new month, so keep that in mind as well. This weekly fair value gap, I've been monitoring that. I shared it with you guys a couple weeks ago, so you guys have had it on your charts as well. Market's staying below that, right? It's been unable to get above that fair value gap. So what that's telling me about the order flow is that we're not bullish right now, we're bearish. So as you were saying, with crude oil, with OPEC cuts, one thing to keep in mind on the fundamental side of things, like fundamentally, right, they're cutting oil, so price should go up. It's just simple supply and demand. So I completely understand your standpoint there. But one thing to keep in mind, right, if we're in a long-term buy program and it's bullish, and OPEC is, so it's fundamentally bullish, many times it'll drop below sell side first. Because think about how institutionally minded traders get into their setups. Institutionally minded traders can only buy from losing traders. So if it's going to go higher longer term, which I'm thinking we will see crude oil in triple digits, I absolutely think we will get there. But again, it doesn't mean we just buy the market. So based off what I'm seeing in this structure, we're unable to get above that weekly fair value gap. We have sell side liquidity pool here at 76.20. We have a sell side liquidity pool here at 75.32, so relatively equal lows on the weekly chart. I'm going to look for that as an initial draw for crude oil based off what I'm seeing. Daily chart, and this is where it gets a bit muddy. We've been in like a seek and destroy type profile, taking out short-term lows, short-term highs, short-term lows, short-term highs, and just staying in a little range. But what I'm seeing right now, based off how we respected that weekly fair value gap and we broke down, this fair value gap here, we use as inversion, right? Open, hit it, resistance, sell off. So what I'd look for on crude oil will be a run down into the sell side here. If we get animated through that, we have sell side down here. And if we get animated through that, we have all these relatively equal lows here. Am I making a case that we're going to see oil at 73s? I don't know if we're going to get that far, but those are all downside targets, right? So it's a matter of seeing how we trade at each key level, right? So if we accelerate through this low, we'll see this one. If we accelerate through this low, then we'll see these here. So it's a matter of taking it step by step, day by day. But initial draw is going to be this low here for me. And then if we accelerate through that again, we have these key levels here. But with regard to what you were saying, if we're going to see strength longer term, well, then it could just be doing what? Dropping down into a short-term discount, buy the stops, and then send it higher. So again, just because it may be bullish fundamentally, or like I teach like commitment of traders, seasonal tendency, when all those things are in alignment, again, it also doesn't always mean the market's going straight up. It can still be bullish on the commercials, bullish for seasonal tendency, but it can still drop into a short-term discount for smart money to buy and then send it higher. So keep in mind, with all that, you still have to have the mindset of an institutionally minded trader. And if the market's bearish on the technicals, you have to wait for the technical analysis to get in alignment with your fundamental analysis. And that's how you use both of those and not have them conflict, right? Because, let's say fundamentally we've been bullish, all these weeks, but it's been dropping. But the chart's been telling you it's dropping. So we can't force the fundamental bias, but if we wait for them to get into alignment, that's where you're going to get those explosive, long-term sustained price runs. Cobra, I'm bearish on DXY because of the bonds. Now, there you go. Every market, there needs to be a bull and there has to be a bear. That's what makes it fun, right? Jer, one can take payouts from prop firms into a trust, get paid 13%. There you go, Jer. That's also a valid strategy as well. A lot of different ways to harvest income and grow wealth in these markets. Appreciate you sharing. Yeah. Inner Circle Treasury, it repeats every week, every day, and it won't stop. No doubt, no doubt. Unicorn Queen Dylan, when you say surgical strikes, what is your average target and handles? So it really depends on the ranges, right? So for example, like if we go to MQ and like we go to like a surgical strike for me, for example, like, and this is one that it won't be hindsight. I did walk live on Zoom with this with my community. So let's go to market replay. Let's go to lower time frames. I'll show you what I'm looking at. So a surgical strike for me may just be, for example, this fair value gap here down into these equal lows here. The reason it's a surgical strike is because it's not depending on the monthly, the weekly, the daily. It's just in and out trading the intraday volatility. So this here, in my opinion, for example, would be a surgical strike. What would be a bigger trade or something where I'd hold for like a one shot, one kill, I'll hold for the entire day. I'm only willing to do that if I have a clear monthly, weekly, and daily bias. If I don't have all that, I'm not willing to hold for long trades. So let's say like I'm extremely bearish on the monthly, weekly, daily. Well, then I can get a trade here and I don't just have to take off my profit here. I can let it just keep running and let time and price tell me when to close out the trade. But when it's more uncertain, like this type of week, I'll get in, hold for my targets, and I'll be done. I'll take partials along the way at, 30 handles, 50, 60 handles, depending on what I'm looking for. But if you look at the ranges here from this fair value gap down to this low here, that offers 140 points. So even though I'm saying surgical strikes, it doesn't always just mean, 10, 15, 20 points. You can still take down hundreds of points if the volatility is there. So the reason I say it depends is because sometimes the ranges are more open than others, right? Sometimes the entire range of the day will just be, 100, 200 points. Sometimes it'll be 400 points and there'll be a lot more range to make money off. So it all depends on the size of the ranges that we're in and the present market structure. And that's going to change based off the level of volatility that we're seeing. So here, a surgical strike can still be 100 handles. On other days, it may just be 20, 30, 40 handles. So it just all depends on what the market structure is. But again, the good thing is the markets are doing the same thing week in and week out. It's just all about the only adjustment is the size of the ranges. Sometimes they're bigger ranges and sometimes they're smaller ranges. Jer, one can use trailing stop loss instead of target. Absolutely. That's another valid way to hold for bigger runs as well. Don't have a profit target, just trail the stop and see how much juice you can squeeze out of the lemon. That's valid as well. Absolutely. Jay, thanks. Absolutely. Jer, wheat, oats 2022 was wild. Was wildly long all year. Yeah, definitely, man. All commodities going to the moon. Mr. Davis, can you trade wheat like a normal silver bullet AM session? It's the same as indices. I'll try on demo. Yes, sir. It is. Absolutely. You can absolutely trade silver bullets in wheat. You can trade silver bullets in copper. You can trade silver bullets in crude oil. All of them. All of them are applicable. Absolutely. And if you look at some of the executions that I shared with you guys from the live trades that I took in my live account on wheat, a lot of them were also silver bullets as well. Like I'm getting in at that time of day as well. So it applies to all asset classes. So just like I emphasized with you guys in the Discord, you learn how to trade one market, you know how to trade them all. It's all the same thing. Just slight differences in the timing if you're moving from Forex to futures. But other than that, highs, lows, imbalances, and time of day. All you need. All right, guys. I've been having fun with you, but I do got to get going. A couple more questions. CL likes to revisit the closing of the past day. Yeah, every market has its own signatures that are unique to them, but for the most part, it's all the same thing. Cobra, true. I guess we'll see. Also, thank you and your team for uploading Learning Center and your website. It's really helpful. Awesome, Cobra. Glad that's helpful, and I appreciate your feedback, brother. And do check that out if you do want to have the insider perspective. Unicorn Queen. Okay, thanks. Understand. Awesome. All right, guys. That's going to be it for me. Jared, be well. You as well. Thank you, sir. All right, guys. That's going to be it for me. Hope you guys found this one insightful. I will, or we will, myself, my team will update you guys throughout the week, what we're looking for and why. You guys have a fantastic rest of your Sunday, and we will be back to business. We'll be looking to do some YouTube live streams with you guys over live price action going forward. What days we'll do it, I'll have to let you guys know, but we'll look to come out on the YouTube a bit more than we have been. But again, my hands have been so preoccupied with my obligation to my private mentorship. So, but we will look to get back to business there soon as well. So with that, guys, take care. Have a phenomenal rest of your day, and I'll see you guys on the next one. Take care, guys. See ya.